I think in the very, very short term, there might be a bit of consolidation. To give you an idea, right now, if you want to trade with leverage and speculation on the different exchanges, the financing fees are really high. So people are paying about 6 basis points each hour to hold Bitcoin. So right now, already today, we saw Bitcoin trading a little bit lower as the cost to trade it is getting a bit expensive. However, if you look at the longer term, if you look at the seasonality, so usually from this point until the end of the year, traditionally Bitcoin is going to gain with about 50%. That's the typical rally we see around this time of the year. A bit like we see in stock markets, a very strong Christmas rally. The other thing as well is that there are some fundamental indicators that crypto enthusiasts look at, and these indicators are all telling us that we can go up to maybe $100,000 per coin. As well, what has changed now is the technical outlook. So we are above the all-time high, but already a couple of weeks ago, we triggered some technical analysis patterns, and they also suggest we can go up to about $80 per coin. And if you look what the instruments people use to trade cryptocurrencies today, then it is primarily technical analysis. So everybody's looking at the same patterns and they all say we can trade a bit higher. Now the problem again is, the funding costs, which are a bit too high in the very short term. And as well, there is the fear and greed index, the similar type of indices we see, for example, in stock markets. CNN does one. And that fear and greed index is showing that, again, cryptocurrencies and Bitcoin are very, very elevated in the short term. But if we look at it from a little bit slightly longer term perspective, then I do personally think we can go up to 80, maybe $100,000 per coin. And I think we can do that as long as you trade above $46,000 per coin. To some extent, yes. I mean, I'm reading some of what is being reported, and I think it was the Financial Times that had an article where they interviewed a portfolio manager that trades in gold, and he was in that article, that portfolio manager was saying that his clients they don't see gold as much as a hedge anymore, and that they all prefer Bitcoin. And what's interesting now as well is that currency markets are a little bit difficult. They're not really moving constructively. You have gold also not moving constructively, and stock markets are a little bit difficult. So the only sort of easy game is to buy Bitcoins, and as well, it acts like a hedge. So I think it's definitely going to be more talked about this year. And for now, I think as well, we're still in the beginning phase of a move to the upside. I think they put quite a lot of pressure already. So the last move was obviously to force Chinese investors so they could not trade. So what's happened is actually we have decentralized exchanges, which is exchanges that is like a piece of software that manages itself to some extent, that don't do any proper KYC. So they don't ask, are you from which country you are, and so on and so on. And we have seen them increase a lot in volume. And so I think the investor that wants to trade this in China are going there. If we look at the miners, so China used to dominate the mining side, but it looks like they have set up now in other parts of the world. So I think they have done at least as much damage as they can do right now. What is interesting as well is that they are launching their own cryptocurrency, and now they were putting a bit of pressure, according to the news, that McDonald's in China, that they would allow their own cryptocurrency to accept more of that. I think they only accept that in maybe 270 stores right now. So there might come a competition from there where they're forcing people to use their own currency, but I don't think that's gonna change really quickly.